Could you tell us what has happened? Where is the yield now? Because it had jumped to about 23, 24%. And 23, 24% for money raised overseas is almost, I mean, it cries default. And that's the reason why I guess markets everywhere panicked. What happened?
So let me first put it into context. This is a modest size $325 million USD bond issued in 2015, maturing in 2020. This is not listed on any exchange. It's an OTC bond and has very small volumes. For example, the volume in the last 3 months is less than $5 million. So clearly there is no price discovery happening here. Almost everybody holds it to maturity. This bond regularly moves around in pricing. It moves around, it has in the last 24 months been between 85 and 109 on a regular basis. So quite frankly, this pricing has no relevance to the substance. And if you look at a pricing of 89 or 90, what does it tell you? Does it say default? Because default bonds don't trade at 89, 90. Default bonds trade at 20, 30, 50. So it just is a situation of a very illiquid instrument which just trades at a particular pricing point. Tomorrow morning, in a month's time, you'll see that it might be at a very different price point, and then maybe we should say that, you know, Lodha's business has gone.
What did you raise this?
I'll tell you why it became suddenly important. 2 weeks back, or maybe last week, SEBI told rating agencies that you should look at bond yields as a material event. Yeah. Obviously, this was a learning from the IL&FS issue where bond yields were not AAA and yet the rating was AAA. So do you worry that rating agencies may look at this yield?
See, our rating was reaffirmed as little as, I think, a month and a half ago by the international rating agencies. And again, to reiterate the fact, what SEBI has said about bond yields is where there is price discovery for market-listed bonds.
Okay.
This is not a market-listed bond.
Fair point.
The test of the pudding is it being serviced or is there any delay or default? And not only is the question with this particular bond, but you can check with any of our lenders, big lenders, small lenders, whatever. We are prepaid with most of our big lenders for up to a year, up to November, December 2019. And there hasn't been, let alone default, even a day of delay with any servicing. And we continue to be able to access funds from the market. We sit on ample liquidity. And you may have heard this morning, we are in a part of a process where we will be raising almost 5,000 crores from a series of transactions over the next few weeks. So as a business, we're in a very good space.
The sale of properties is in London.
So Lodha Developers, which is the development company that we have in India, is selling its equity interest in the London properties and will receive about 4,200 odd crores depending on the exchange rate for that sale. And this is driven by a strategic decision by our board, where we have decided that we need to move to a much higher level of ratings. We want to move into the AA family over the next 12 months. And as a part of that process, we are looking at significant delevering because we have such significant assets which can easily be delevered.
But these assets that you're selling, was this the collateral for the $325 million?
No. So the $325 million bond is issued by Lodha Developers International Limited, which is a subsidiary of Lodha Developers India. There isn't collateral associated with it. It's a bond which we will repay completely, including from the proceeds of this. Just to tell you, the bond's total amount is 2,100 crores. $325 million. So quite frankly,
this property will fetch you over 4,000 crores.
This we've already at a state where we are getting somewhere over 4,200 crores just from the equity value. It's not the property value, it's the equity value which we are getting.
And what do you propose to do with that money other than this
Like
bond?
I said, our board's mandate is that by the end of 2019, in the next 12 months, we want to move towards a AA rating, which means lower leverage, higher equity. And that's a part of the process. We are doing this. In addition to this, we have a couple of other private equity transactions which are signed and will get funded over the next few weeks, which will in all raise about 5,000 crores for the company, which in a sense, we believe that as a company, we are very, very well placed to deliver in India across multiple asset classes, and we want to make sure we are very liquid and very solid.
Okay. What are your plans with regards to your IPO? It's been delayed?
The IPO, as you're aware, currently the Indian markets are not conducive, not just us. There has been no IPO which has realistically happened in the last few months. We expect that there will be a window to do the IPO either before the general elections or after the general elections.
Okay. Just to finish the debt argument, your RHP said that for the 9 months of FY18, your debt was 17,726 crores, and that gave a debt equity of about 3.8 times. What is the goal to make it AA? Do you see yourself bringing down this debt substantially?
Clearly, means the 5,000 crores which comes in automatically reduces it by 5,000 crores. We expect our debt equity to be less than 2:1 over the next 12 months.
Okay, just to press on that debt point, what is the total interest outgo? Around 2,000 crores? I mean, as a group?
Yes.
Around 2,000 crores. Your sales last year were about 8,000 odd crores.
We took in cash of about 8,700 crores. This year, first half, we took in 4,700 crores, which is a record first half.
Okay.
And
So
October and November are performing very well. Okay. This year, we will take in totally about 9,500 crores of actual receipts from customers.
Okay, my question is it too tight in that sense? Because 2,000 crores has to go out as interest. You're taking in about, say, 9,000 crores this year. You make margins of 35–40%. So, I mean, I'm just trying to understand, will you be able to withstand a few quarters of sales slowdown? I mean, essentially is my question.
Sure. I think the fact is that as a business, we have multiple asset classes. And we believe that sales are very resilient in our office. Our leasing business is growing very strongly. We now have an office and retail and industrial and warehousing business, which very few people know about, which is now, almost ready, almost worth 3,000 crores, and under construction worth about 7,000–8,000 crores. So we almost have a 10,000 crore portfolio in that segment, which is doing very well. We have about 50+% of our sales coming from what's called mid-income housing or affordable housing. And that again is a part of the market which is doing very well. Premium housing, which is the last balance 1/3 of our business, has been slow for the last 2 years. And in spite of that, these are the numbers. So if you get a few more quarters of slowdown in premium housing, we're very, very comfortable.
You will be able to service this, the debt.
We have always been able to service our debt.
Because, Ekta's point about the IPO, I mean, it was being seen as a way to bridge this gap. I mean, debt equity, 37.
But the 5,000 crores is the same raise as the IPO.
So you essentially use all of that to repay debt?
Yeah, of course. That's the idea, is to reduce leverage and improve our net gearing and improve our ratings. Absolutely.
This premium segment that you spoke about, Abhishek, you obviously have a huge marquee property right here as well. What is the kind of offtake that we're seeing at this point? Because at some point in time, the demand has to be met in order for you to finance your projects as well. Where are we?
So let's put it into context. Again, like I said, real estate is spread across many asset classes. Your specific question is about premium housing. Yeah. The good or bad thing about our premium housing projects is they're almost entirely complete. We have very little balance construction to do, and they're both right next to you, so you can see it for yourselves. And given the fact that there is no GST applicable on sales after the building is ready, it has become attractive, which is the reason why we did almost 3,000 crores of premium housing sales in the island city last year. And we're on track to do a similar number this year.
Okay.
So sales there have been good. Can they be stronger? Absolutely. I think premium housing sales should become stronger. We would prefer for them to be stronger, but they are not. But having said that, mid-income housing is on fire, in the sense that, we are going 15–20% year-on-year growth. Our office portfolio, and everybody almost thinks of us as a residential player. But the fact is that our office, over the last 3–4 years, we've built up a sizable office and retail portfolio, generating rent. We have a lot of active interest for new leasing. And, at 10,000 crores, is probably the second, third biggest rental portfolio in the country.
Okay. So what is the under construction percentage of your total book?
Could you just elaborate on that question,
how much are ready for sale at the moment of your block, and how much is under construction?
So our assets which are ready or will be ready, say by March, which is this year, we'll have about an unsold value of about 13,000 crores.
Okay. And the under construction would be?
There's another 20,000 crores under construction.
Okay, okay. So, no, I mean, I'm just trying to guess whether you will require leverage for the under construction part.
No, we're very clear. See, in addition to this 13 and 20, we have another 9,000 crores of receivables from the units which have already been sold.
Okay.
So, if you take that math together, we are very clear that our debt has peaked off. Okay. It is declining and will continue to decline.
There was one lender yesterday which got marked down in markets because of exposure and what could happen because of that bond yields jumping, etc. Could you tell us who's your biggest lender?
I wouldn't
just
get into
broadly,
any specific names. The fact of the matter is that if you speak to any of our lenders, they will tell you that they continue to have strong confidence in our business performance. We have prepaid them. We regularly service them, not like I said, not a day late. And that's the evidence of our performance. We're not a listed company, and I would prefer for our information about private relationships with lenders to, not necessarily be out in the public domain.
Okay. Well, just one last point, because that was a story which CNBC TV 18 carried. In the nuke of Parade property, one of the charges was that the flats were smaller than what was mentioned in the contracts. Is there some legal proceeding on that, and what is your stance? Is it sub judice at all?
No, Lata, the matter went to court. You're probably aware of it. The High Court has ruled in our favor. And the fact of the matter is that we are very happy. We've gotten independent certification done from third parties on the measurement of the areas. And it is very clearly proven that the areas are in line with the agreement. However, if any individual has any concerns, we are very happy to have that independent verification done for those individuals separately.
Abhishek, just news coming in that stamp duty is going up from 5% to 6%, and there is also talk that registration may be another 1%. So that is a total of 7%. I mean, registration is 30,000 rupees right now, right? That will not certainly help market conditions, will it? What's your assessment?
No, I think clearly any transaction cost makes the market slower. And as you know, in equity markets, even modest transaction costs have an impact. So clearly a 6% transaction cost is not beneficial. We do believe that both policymakers and markets need to understand the great importance that real estate plays to the economy in terms of wealth creation and employment generation. And we will, of course, represent, not sure that will change anything, but we will represent to the authorities that this increase is not appropriate. On the contrary, if Bombay is going to become a world-class city, real estate costs have to be moderated. If you have 12% GST, 5% stamp duty, or now 6% stamp duty and some registration charges, 18-19% is a very, very high level of transaction costs, and it ought to be moderated.
There's no denying that the government has not done anything to help the real estate sector, and these only add to the burden. But therefore, a final question. Strong developers can always get, more money. They're not doubted. But do you think the real estate sector generally is in a very difficult spot now?
Lata, see, I was talking to somebody. What is the total NPA in real estate? There's probably a lending of 350 to 500,000 crores out in the market. The total NPA levels are less than 1.5%.
Oh no, I don't believe that number. I'll tell you why. Because banks don't lend for buying land and stuff like that. It's an NBFC terrain. And NBFCs, their restructuring rules are not as strict as banks. So I don't know whether there's 1.5 makes too much sense.
I think, Lata, I only know what's reported. I agree with you that the NBFC rules are not as strict. The point there being is that real estate in general in India has performed well. I think last 3 months have been about a CP money market issue with NBFCs.
Yes.
And we do expect that it will lead to a situation where the higher quality developers get greater access to funding, and some developers who are not so strong will move out of the market. And that's evidence, right? Our market share in Mumbai is now 18%.
Like 10% of the builders are in trouble, you would say. How much of the sector?
See, I honestly believe that real estate in India is very nascent. There's a huge amount of demand ahead. There will be winners and losers. People will get into trouble in some instances. There will be others who will do very, very well. But the fact is the sector as a whole is a driver of the Indian economy, and I think it will keep doing well.